Let's shift our focus now to the war's impact on the global energy market. Oil and gas prices spiked today as the regional conflict escalated and shipping was disrupted in the Strait of Hormuz.
Oil prices surged overnight. More fallout from the conflict with Iran.
The United States military continues to carry out large-scale combat operations in Iran.
The shock didn't begin at an oil field. It didn't begin at a refinery. For millions of people around the world, the shock began somewhere far more ordinary, at the gas pump. Overnight, average gasoline prices in the United States jumped by 11 cents, climbing to roughly $3.11 per gallon. On paper, that might not sound dramatic, but in global energy markets, sudden overnight price moves usually signal something deeper happening beneath the surface, and this time, the trigger was geopolitical. Reports began circulating that U.S. military strikes on Iran had rattled crude oil futures markets. Within hours, traders started reacting. Oil contracts surged. Shipping insurers reassessed risk in the Persian Gulf. Energy companies began calculating potential disruptions to supply routes. The ripple effect traveled quickly from trading floors to everyday life. Because oil prices don't stay inside financial markets, they move outward into transportation, food prices, electricity costs, and household budgets. And when oil rises suddenly, the people who feel it first are often not investors or corporations. It's the middle class and working class. In the United States, families who commute long distances to work suddenly face higher fuel bills. For someone filling a 15-gallon tank, that overnight increase might seem small today. But if crude prices continue climbing, those increases stack week after week. Truck drivers who transport food across states pay more for diesel. Delivery companies pay more to move goods. Airlines pay more for jet fuel. Eventually, those higher costs reach supermarkets, shipping fees, airline tickets, and everyday products. For millions of households already balancing rent, groceries, and energy bills, fuel inflation quickly becomes a silent tax on daily life. But the story doesn't stop in America, because oil is a global commodity. When crude futures rise due to Middle East tensions, the effect spreads across continents almost immediately. In Europe, energy markets are still recovering from years of volatility linked to geopolitical conflicts and supply disruptions. Higher oil prices push transportation costs upward again, placing new pressure on households already dealing with inflation. In developing economies, the impact can be even more severe. Countries in Africa, South Asia, and parts of Latin America rely heavily on imported fuel. When global oil prices climb, governments must either raise domestic fuel prices or spend billions subsidizing energy to prevent social unrest. Either option carries consequences. If fuel prices rise sharply, transportation costs increase, food prices climb, and inflation spreads quickly through local economies. For poorer households that already spend a large portion of their income on energy and food, even small price increases can create serious hardship. If governments attempt to subsidize fuel instead, public budgets come under pressure. Money that could have been used for healthcare, education, or infrastructure suddenly gets redirected to stabilizing energy prices. In some countries, fuel price shocks have historically triggered protests and political instability. That is why energy analysts often say the price of oil is not just an economic indicator, it's a political pressure gauge. And right now, that gauge is moving. Global markets reacted immediately after the Iran strike reports. Oil traders began pricing in the possibility that tensions in the region could escalate further. If instability spreads near critical shipping routes, especially the Strait of Hormuz, through which about 20% of the world's oil supply flows, markets could react even more dramatically. Even the risk of disruption can push prices upward. Insurance costs for oil tankers may rise, shipping companies may reroute vessels, energy companies may increase reserves in anticipation of potential shortages. Each of those adjustments adds another layer of cost into the system. By the time those costs reach consumers, they appear in everyday places, at gas stations, in food prices, in transportation fares, and in electricity bills. For middle-class families, the challenge becomes managing budgets that suddenly feel tighter. For poorer households around the world, the consequences can be far more serious. When fuel becomes expensive, bus fares rise. Farmers pay more for machinery and irrigation pumps. Food distribution becomes costlier. Sometimes the result is simple but painful. Families must cut back. Less travel, less heating or cooling, smaller food budgets. Meanwhile, governments around the world are now watching the situation carefully. Energy ministries, central banks, and economic planners know that prolonged spikes in oil prices can slow economic growth. Higher energy costs reduce consumer spending power, increase inflation pressure, and complicate interest rate policies. Financial markets understand this as well. Investors are already asking a critical question. Is this price jump just a short-term reaction to geopolitical news? Or the beginning of a larger energy shock? The answer will depend largely on what happens next in the Middle East. If tensions calm quickly, oil prices may stabilize. Markets often react strongly to uncertainty, but settle once the situation becomes clearer. But if military tensions escalate, or if shipping routes in the Persian Gulf become threatened, the situation could evolve into something far more serious. Because when it comes to oil, supply disruptions don't just affect one country, they affect the entire global economy. And that's why an 11-cent jump at American gas pumps is not just a local story. It's a signal that events thousands of miles away in geopolitical flashpoints most people will never visit can still reach into everyday life across the world. From commuters in the United States, to factory workers in Europe, to farmers in developing countries, everyone is connected to the same energy system. And when that system begins to shake, the first tremor is often felt in the price of fuel. Right now, the world is watching carefully. Because what happens next in the Middle East may determine whether this is simply a temporary spike or the beginning of the next global energy crisis. The story does not end with a price increase at the pump. In fact, that small number, 11 cents overnight, may only be the first visible signal of a much larger chain reaction moving through the global economy. When oil prices jump suddenly, economists start watching something called the energy inflation spiral. It begins quietly. Fuel becomes slightly more expensive. Transport companies pay a bit more to move goods. Airlines adjust ticket prices. Delivery services raise fees. Grocery stores update shelf prices. Then something subtle happens. People start noticing. A worker driving 40 miles to work each day suddenly realizes their weekly fuel budget has grown. A family planning a trip decides to postpone travel because airline tickets look more expensive. Trucking companies renegotiate shipping contracts because diesel costs are rising faster than expected. Each of these small decisions seems insignificant alone, but when millions of people make them at the same time, the entire economy begins to shift. And that shift tends to hit different classes of society very differently. For wealthy households, higher gasoline prices may be frustrating but manageable. For corporations, fuel becomes another line item in operational expenses. But for middle-class and lower-income families, energy costs are often tied directly to daily survival. In many countries, transportation to work, school, and markets depends heavily on fuel prices. When those prices climb, so do the costs of public transport, taxis, buses, and goods delivery. The result is something economists call cost-push inflation. Is this simply a short-term market reaction, or the early sign of a larger geopolitical energy crisis? Right now, the answer remains uncertain. Oil tankers are still moving through the Gulf, markets continue to function, fuel remains available worldwide. But the situation has reminded governments, economists, and ordinary citizens of something fundamental about the modern world. Energy connects everything. A military decision made in one region can influence the price of gasoline thousands of kilometers away. A shipping disruption in a narrow waterway can affect grocery bills on another continent. And when those connections tighten, the people who often carry the heaviest burden are those already living closest to the financial edge. For middle-class families and working households around the world, the coming weeks may determine whether this price increase fades quietly or becomes the beginning of a broader wave of rising costs. Because in today's interconnected global economy, the path from geopolitical tension to everyday life can be surprisingly short. Sometimes it begins with something as simple as a number on a gas station sign, and sometimes that number tells the world that a much bigger story is unfolding.